Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leader in pure technical analysis, avoiding all that Wall Street hype. Today, Thursday, April 16th, 2009. Well, we're seeing an interesting day on Wall Street today, mainly because we're coming off of JP Morgan's earnings, jobless claims this morning, and housing starts. Now, those were all key informational things that we needed to know to kind of figure out which direction this market was going to go. In addition, the real thing you want to be watching is volume today. Volume has been extremely light the last few days, and you have to continue to watch that because when volume is too light, the markets will generally float higher. That's one of our key rules that we follow, and it's happened perfectly over the last week or so in this market. Now, what you're looking at here is the intraday spiders chart, the SPY, and right now the markets across the board are slightly higher. The Dow up about 10 points, the S&P 500 up about 4 points, and the NASDAQ higher by a nice amount, up 21 points or 1.3%. The Dow and the S&P are just fractionally higher. Really, it's a flat day. Now, JP Morgan was the big thing, and we mentioned this yesterday, folks, to watch for JP Morgan. JP Morgan came out this morning, and I'm going to show you that chart, and I have all my trend lines on the JP Morgan chart as well, and you can see that we're right into a key resistance right up here. But what happened with JP Morgan was really interesting this morning. 6:30 a.m. this morning, Eastern Time, JP Morgan Chase released their earnings. Now, the earnings came in beating estimates, but those of you that have been following these videos, those of you that are premium subscribers to our website under the Research Center or chat room, know that JP Morgan had to do more than just beat earnings. They had to do equally as good as Goldman Sachs. The bar is always as high as the previous sector company previously to your post. So, for instance, if I'm a company and someone yesterday posted great earnings of 100%, better than expectation, I better come out with the same amount of positive earnings. If I come out less, then I miss expectations. And again, every day those expectations are adjusted by the previous company's post. So in this situation, it was Goldman. Goldman had great earnings. JP Morgan comes out with earnings as well today. They were very, very good. A couple little things there, but what we saw initially pre-market is JP Morgan go up to about 33.5. Then pre-market it sold off to 32 and change, actually all the way down into the mid-31s. It was actually down $1 pre-market. And then what we saw was a move back higher pre-market on the JP Morgan chart where we gapped higher. Now, we gapped up right into major resistance at $34. And from that point on, we started to sell. And the selling was pretty intense, all the way down to gap fill down here. Good old gap fill. You bounced, released, and moved to the negative side down here. You followed the 20 moving average all the way up, and then recently have spiked up. Now notice this trend line. If you connect the low from yesterday to the secondary low here and all the way up, notice how the market right up here hovered right on that kind of purplish, light purple line. And notice what we hit there. We've actually pierced the blue line, went right to that level, and again, this is all trend line analysis, folks, that we focus on. So you got to understand here that the key levels in these charts are based off of key technical trendline analysis that we do. That's our specialty here. We're able to call every major minor move in the markets by doing this type of thing. And that's what we've been doing for our subscribers over the last 2 to 3 years since we started the company. Alright, now the key here is this, guys. Going back to the spiders, we want to talk a little bit about what the spiders did. On JP Morgan being positive going into the open, financials rallying. We did see jobless claims come out this morning at 8:30 a.m. Eastern Time. They were positive. They were better than expectation. However, the housing starts came actually lower. So it was kind of a mixed bag. But in this market, remember what type of market we're in. I can't stress this enough. When you're in a mid-bear run here of a major bull market, for instance, we're inside of a big bear market, but right now we're in this major bull run, you have to remember that people and the markets are discarding negative news to go with the positive news. And that's exactly what you saw today with jobless claims and housing starts. One negative, one positive. Which one is the market going to pay more attention to? The jobless claims. Why? Because it's more positive. All right, positive is ruling the markets right now, especially in light volume. So that coupled with the JPM gap up this morning is why we gapped up on the spiders here. You can see the spiders, the markets gapped up beautifully, but just as JP Morgan started to sell off, so did the spiders. And the spiders came down hard, gap fill, just like JPM, got a mini bounce, then actually fell lower. Now, this purple line, I want to stretch these, show you where I got these purple lines from. This one connects right here to the secondary low and connects all the way right up to here. That's ones we're still watching to see if we tag. The bigger one in this chart, though, is this one, connecting this low right through the lows, connects to the high yesterday, and the next high, look at how perfectly that hit was, and then all the way up. And this one actually is a very major move today, or a major point in the markets. Notice how you gapped up and fell right underneath this purple line. And what you did was you rallied back, hit it, fell down to the lower trend line right here in blue. Then right off of that level with a beautiful bottoming tail. Notice the bottoming tail, guys. I can't stress to you how much I pointed these bottoming tails out lately to our premium subscribers, but you can see it right here. Beautiful bottoming tail. That's a buy signal as long as you don't take out the lower portion right here. All right, you take out the lows right here of that candle, it's negated. But as long as you don't, you look for more upside in the market. Sure enough, it works out beautifully. Look at this. All the way up, where do we go? Purple trend line. Pull back. Purple trend line again. Pull back. Little pause candle. Again, testing the purple trend line. Pull back down to the blue line, and you start to consolidate. Now, remember the pattern. Price, pattern, time, and technical trend line analysis. That is our Bible. That's our holy book, folks. So what you want to remember here is that when you're dealing with these things, you have to watch for pattern and look at the pattern. Big move up, inside bars consolidation, right into major support. You have the 20 moving average right below, and then blast off. What happens? We pierce the purple line again, hit the upper resistance at 85.85 up here, 2 candles in a row. We close above on the second candle, but we never confirm it. Remember, confirmation. You have to know when a candle confirms, when it's a true breakout or when it's just a fake out. Remember, breakout before the fake out. Remember which one it is, and you have to know this. This is all stuff we teach in our research center. I do encourage you to come join. Now, we fake that out and do not, and look at, we close all the way back below. That means this purple line is still intact, and it currently is intact. So continue to follow this today. This is major resistance here. Look at the next candle. We actually pierced it again, now pulling back a little bit under, but this is a major resistance level right here, folks. You have a blue line right here at 85.85. Right here, $85.85, and the purple line is right at that point. It's forming a necktie, what we call a cross between 2 moving averages or 2 trend lines, or a moving average and a trend line. When you get that, it's major, major resistance. You have to know how to trade it, but right now this is a lot of resistance. If we get above the blue line, folks, right now you're looking for either a break above the purple or the blue line. If it's at right here, it has to clear both. It would have to go right up in this area. All right, you get a close over here, you get confirmation. Well, then you're looking at the next resistance point. We'll talk about that on the 60-minute chart in just 1 minute. Now, the key here again, guys, what are we talking about resistance support lines? As I mentioned, resistance right here currently is $85.85. That's a major resistance level on this chart down to 10-minute. If we start to fall, you have support all the way back down here at the 20 moving average at 85.45, 85.50. That'll be your first support line. If you break through the 20 moving average and this blue line, then you're going to come all the way down to this lower purple line, which looks to be the next support line, currently trading at $85. However, it is continuing to move up. Just like the moving average will slide up, so you have to adjust your support line as that 20 slides up. The blue line will remain the same, but this purple line is angled and will continue to move up. So will the 50 moving average and the 200 down here, all right? So those are all major levels, and just continue to watch how much trouble this market's having here. And this is exactly why we talk about these trend line analysis levels, because they're exactly telling you why the market's faltering here, why is it having trouble, and we know also if it breaks this level, then it has a possibility of a very, very nice move up because it just cleared major resistance. All right. Oftentimes we'll look for consolidation, of course, but that's another story that our premium subscribers are privy to, and what we look for in the pattern, price, technical analysis, trend lines, and timing. Okay, let's go to the Spider 60-minute. I want to quickly do a little analysis here to show you. Now, watch this market. This is why this level is so key. Look at this high to the high to the high, gap up, and this is exactly where we're coming back into. So this is a great example of why what we're at right now is such a major resistance level, and why at the same moment, if we break above it, you could actually have a very nice run upwards of here. All right, this is the high of this candle, folks. See this little wick right here? We actually were as high as 86.60, and if we break through this level, this 85.85 level, or 86-ish, then you could be headed towards that 86.60, and I want to make sure everyone's fully aware of that. Now, that's the resistance on the 60-minute. On the intraday, if you pull back, you're looking for the 20 moving average down here, right here. This will be very, very good support. Let me just drop that line in there, and that's at approximately $85 on the Spiders 60-minute. After that, obviously, if we were to really dump out, you're talking about some levels down here. I'm not going to go into that, though, folks. That's more for our premium subscribers. But I just want to reiterate, folks, that you have to understand trendline analysis. A lot of you guys that are watching these videos, obviously, are with us in the chat room. We have a huge group of individuals, great trading individuals in that chat room, as we trade and analyze the markets throughout the day. The research center as well, folks. You guys know what's involved there. Pro Trader watch list, nightly videos, which are now plus 30 minutes because things have been so active. Every night, 30-minute videos on technical analysis of current market. daily market reports with major levels on gold, oil, and the dollar, plus the market, hidden gems, technical tactics, you name it. They're all in there, folks, for you to enjoy for only $49.95, $99 a month. Really, really cheap there. But in any case, folks, we hope you come join us. We hope you enjoy these videos. We thank you for all the positive feedback. We really do appreciate it, folks. And again, thank you for watching. Talk to you tomorrow. Take care.